17th Audit Committee minutes. Are there any amendments to the minutes from June 17th? Can I get a motion to approve the minutes?
So moved.
Seconded.
Second. Okay, thank you. All in favor, say aye.
Aye.
Any opposed, say nay. All right, the minutes pass. Our first couple business items here are going to be presented by Matt LaTour. The first item is Audit Policy RF 5-1.
Mr. Chair, members of the committee. So as I've talked about and we talked about in our workshop in September, what I'm going to ask for today is approval of 3 items that we consider to be what I call our audit framework. So it's a policy, an audit committee charter, and an audit department charter that basically lay out our scope and authority, the role and responsibilities of the committee, myself, and some other detail. I'm not going to go through these in great detail, but we're going to go through one by one. I'll talk about each individually and just highlight some of the key changes that we're asking for, and we'll kind of do a vote on each one as we go through. And we'll stand for questions if there are any. So on the first item, the internal audit policy, this is really just administrative updates. There are no major changes to this document. We actually updated this in March, but it was considered to be minor enough that we didn't take it to the full committee for approval. I want to bring it today just because we're bringing the other documents forward, and there is we should really be doing this by IAA standards every year. So I think going forward, we're going to look to just have this committee review the policy and the charters each year, just to see if there's any changes the committee would desire to have. So in the audit policy, and we've shared this document in your packet, but we have a policy statement, a purpose and scope, implementation and accountability. And as I mentioned, there's non-substantial changes. At the title, my title changed to Chief Audit Executive a little while back, so we've just updated to make sure that's relevant. And I think it's important just to make sure this committee sees it, has visibility on it, and affirms their support for it. So with that, I'll stand for any questions on the audit policy.
Any questions for Matt? Okay. All right, Matt. Can I get a motion to approve the audit policy?
So moved.
Second.
Second. All in favor, say aye.
Aye.
Any opposed? That carries. Thanks, Matt.
Okay.
Our next item is the Audit Committee Charter.
All right, so as I mentioned, the audit committee charter, this is really your document. This is and we'll ask the council subsequently to affirm this to show the council support for having an audit committee and defining the purpose and scope of the audit committee. So just a summary of the content, there is an audit committee mandate, a purpose, responsibilities being oversight of internal audit in my position, other oversight responsibilities, cybersecurity, enterprise risk management, internal control, and then there's some details about how the committee will operate and function. So largely, this is the changes to this document are made this year to conform with global internal audit standards. As I've talked about in this committee before, those changed earlier this year. And so a lot of the language here is just updated to make sure that it conforms with the standards. There are some other changes. One of the things that we looked at was just having external members, that we really appreciated the service of the external community members, and removing the term limits to make sure that those members can stay as long as they wish, given our selection process every 4 years. And also making sure that we have the inclusion of enterprise risk management, information security, and also thinking about how this committee can make sure that it's reporting out activities of the audit committee to the full council. So that's just a quick summary of changes. We've talked about this again in the September workshop and provided a draft. So with that, I'll stand for any questions on the committee charter.
Any questions from that? Can I get a motion to approve the Audit Committee charter?
So moved.
Second?
Second.
All right, all in favor, say aye.
Aye.
Any opposed? Okay, that passes. Thanks, Matt. Our third business item is the Internal Audit Department Charter.
Okay, so the third and last item. So this is actually, the department charter is your purview. So once this is approved, it doesn't go to council. It's actually just approved. Within the audit department charter, we talk about the purpose of internal audit, conforming with global internal audit standards. A really key thing I want to make sure I highlight is the full and restricted access to data. It's a very important part of the independence of internal audit and critical to doing our work. So I just always like to highlight that we're asking our board to give us that authority. This document talks about our independence, our organizational position, reporting relationships and objectivity, and talks a lot about my role as Chief Audit Executive in terms of action items I will pledge to report to you on a periodic basis. That is a key part of IA standards, is making sure that we're reporting back to our board partners. And one important part of this is including a quality assurance and improvement program that we'll be talking about over the coming weeks and months and years, reporting back to make sure that we're on track for our next peer review. Again, just changes really along the lines of the public sector charter from the IAA, and some other identification of key roles and responsibilities and requirements for my position to report to you. So I think one way of thinking about this one is this is what you should be looking to hold me and my position, my department, to account to this committee going forward and asking the questions of us to make sure we're doing our jobs correctly. So with that, I'll turn it back for any questions and ask for a motion on this one.
All right, any questions for Matt? All right, can I get a motion to approve the audit department charter?
So moved. Second.
All in favor, say aye.
Aye.
Opposed? Great, that passes. Thanks, Matt. First series of reports begins with another one for Matt, is the Chief Audit Executive's report.
I'll just stay here. Usually I sit at the table and do this one, but as long as I'm here. So I'm going to go through briefly just some updates for our department. Just a reminder, in December, which is just a month away now, we'll go through, most of our meeting will really be dedicated to our department, approving an audit plan. We'll talk about our strategic plan going forward. A lot of updates on follow-up and some of the activities we've been doing this year. I don't have a presentation for this part of it. It's just sort of me talking. But a couple things I wanted to make sure I highlight for you at this point. One is we normally do, just talking about some of the department changes. Ian Klein was selected as a new associate auditor in our department. He was an intern before, did excellent work for us, and is an intern, is now on with us full time. We continue to work through our audit plan, and again, in the annual meeting, when we go through, we'll talk about all the accomplishments we did against the audit plan from last year, and then talk about going into next year. I do want to flag a couple things for this committee in terms of external audits. We've completed our on-site Federal Transit Administration triennial review in just a few months ago. We're working through with the FTA now on a draft report and expect a final report in December. So when I get the final report, I'll make sure I send it to the committee and we can talk about the findings and corrective actions that we'll be undertaking coming up in that meeting in December. So I'll have a more full accounting of it. It's just still in draft form. So I thought we'd wait till the final report to have a discussion in detail. But that on-site has happened. We've also been notified from the FTA that we'll be having a procurement system review that will take place on-site in February of 2026. And we have already started to respond to requests for information for the procurement system review. Another audit that we're working on is Minnesota Office of State Safety Oversight safety audit. This is a regular they call it triennial, but we do activities around this most years. And that report is also in draft form. So another one that I'll send in between this meeting and next. As we talked about in the workshop and concurrent to the charter where I talked to you about other responsibilities I have as Chief Audit Executive, I have taken on the role as Chief Risk and Compliance Officer in addition to my duties as assigned. This is transitionary for now. Until we fill the audit role, I'll continue to oversee the audit department as well. I do ask this committee to help me hold me accountable to make sure that we have safeguards in place, that I'm not auditing myself. So I think that we'll keep track of the work that I'm doing on both sides and make sure that you're well informed about what work we're doing to make sure that we're not falling into a situation where I'm overseeing both the audit side and the internal control side. Just a reminder that the areas that will be included in this new function are ethics, complaints, and investigations, enterprise risk management, internal controls, business continuity, and policies and procedures. So looking forward to that work, and looking forward to all of your support going forward. And you'll be seeing a lot from me in both roles going forward. So I also have been supporting the forum, which is a new enterprise-wide initiative this year to help deal with cross-functional areas of the council. And I'm also alternate incident commander for the council's incident command structure. We haven't done a lot of activation work in that space in the last year, but have done a few trainings and continue to be on the org chart of that role. Just a few updates on our external quality assessment that happened last year. I have the 6 action items that we've continued to work on. The first one is a refresh of the audit framework, and we're working on that today, obviously. Had those votes, and we'll, as soon as those are approved by council, we will be largely complete with that item. Myself and the audit managers continue to work through our audit manual, and staff have been helping in a lot of different ways improve our processes and creating documents that will help inform our work going forward, including things like style guides and some process flows that will help us work through some implementation guidance from IAA as well on cybersecurity and some other spaces. I'm happy to report on action M3 that we are moving forward with software technology and an implementation consultant to help us implement that software. We just finished that agreement, and we'll be working with the consultant to set up dates and times for our team to start transitioning from our existing technology to new and better software. I think that's going to be a really significant improvement and something that this team is very much ready for. We will talk on Action Item 4 about the strategic plan at our next meeting. We have some good staff working on redrafting our strategic plan for the next 3 years. We are also working on continuing with the competency performance standards and training model and our quality assurance and improvement program, and expect those to be ongoing and probably looking more like Q1 2026. So with that, I'll stand for any questions on this before turning it over to Mr. McKean.
Yeah, thanks, Matt. As you transition, who exactly will oversee the audit team? Will it be an interim person, or how exactly would that look, and what's the...
I am going to continue to oversee the audit team until we identify a person through a recruitment process.
Okay, great. Any other questions for Matt?
Oh, same question.
Thank you, Matt.
Okay, thank you all.
Our second report is Travel Demand Management Grant Recipient Review. Movement is Minneapolis, Nicholas Jelinek, Guptan, Kaplingat, Sydney Kloster, and Lakshmi, Vemuri.
All right, good afternoon, Chair Lee and members of the committee. My name is Lakshmi Vemuri, and I'm here with my colleague, Sydney Kloster, and we're going to be presenting the TDM Grant Recipient Review on Move Minneapolis. So a bit of background on the TDM program, AKA the Transportation Demand Management Program. So the purpose of this program specifically is to do outreach and education activities, and this program oversees TMOs, which are the Transportation Management Organizations, which are third-party subrecipients that provide activities, and these activities the purpose of them is to reduce emissions, as well as promote alternative forms of transportation, which include biking, using public transit, walking, all of those. And these TMOs in particular are provided funding by the Climate Mitigation and Air Quality Funds, which is also the CMAQ grant. And this grant does require a 20% local match, so it ends up being 80% is funded federally, and then 20% is funded through a local match. So these awards are awarded through the regional solicitation where the CMAQ funds are set aside, meaning that Metro Transit Services at the council does have a role. And currently the council oversees 4 of these TMOs, which are Move Minnesota, Move Minneapolis, Anoka, and 494. And this audit in particular focuses on one of these TMOs, which is Move Minneapolis. But all 4 of these TMOs are overseen by Metro Transit commuter programs. And it's also worth noting that this grant is uniquely situated in the council, meaning that it doesn't really reflect the council's overall grant management.
Mr. Chair, I have a question.
No, go ahead.
You said the TMOs are subrecipients. Are the four that, or this one that in particular we're talking about, are they technically a subrecipient of the Met Council?
So we'll kind of get into that throughout the
Okay.
presentation.
Thank you.
So a little bit of background on this particular TMO as well as its organization. So we looked at two of these organizations, which is the Minneapolis Regional Chamber as well as the Move Minneapolis TMO. So the primary subrecipient of these grants was the Minneapolis Regional Chamber, or the MRC. But for the past year that we were looking at this, from 2023 to 2024, the Move Minneapolis, which is a subsidiary of the MRC, received a little over $800,000 of these funds. So Move, as the TMO, performs all of the project activities that I previously mentioned that the TMO does do. So a little bit about the relationship between the MRC and Move Minneapolis. So a lot of these operations are intertwined. So they do share a board, a CEO, they do share support staff as well as office space. And what initially instigated this audit was the continued challenges that were publicly disclosed by news sites last summer. So we had two main objectives for this audit. So our first objective was to determine if expenses were allowable and allocable. So this means that the costs are not federally prohibited and are related to project costs related to CFR 200. And our second objective was to determine if program activities were aligned with program rules. The scope of this audit was originally the financial years of 2023 to 2024. However, once it was discovered during the course of this audit that that the alleged fraud and the alleged diversion of assets happened in 2019 to 2022, we did do a kind of cursory desk review of invoices just to see any of the fraudulent vendors. In addition, we did do some reconciliation testing in April and September 2024. And then we also checked any external audit reports, any financial statements, as well as invoices, as well as any project documentation. The methods that we used, we did review over 23 invoices, as well as expense documentation, certified payroll, as well as staff timesheets. And we also conducted on-site interviews with Chamber and Move staff. And we also interviewed staff at the council within MTS and MT. We also had conversations with the third-party accountant that Move had acquired during the course of this audit. And then we also had conversations with the investigation firm that was responsible for investigating the diversion of assets. And with that, I will turn it over to Sydney, who will go over our findings and our recommendations.
Thanks, Lakshmi. All right, so you'll notice that this report is divided into 3 sections. There are a number of findings, 17. So the details we had to reduce a little bit down than we typically would, but I'm going to go in order of the report, so please follow along, and there's additional graphics and visuals and information, and we'll also have opportunity for questions after the presentation if this seems to be going a little quick or any of the information is challenging to understand in a limited time. Our first section that you'll find is a compliance section. So the compliance section is composed of 6 findings. The first relates to that alleged diversion of assets that Lakshmi was discussing earlier. The total diversions was just under $290,000, and during the course of our audit, we were unable to confirm that the federal funds which we had given to Move Minneapolis had not been impacted by that diversion. So the 2023 tax forms disclosed the diversion and cited unsubstantiated payments to unknown vendors and questionable travel expenses. This has since resulted in a federal indictment of 5 charges for the former CEO of the Chambers and Move Minneapolis. The reason why we can't confirm that federal funds were or were not a part of this diversion is due to the poor financial controls that we observed, and we'll go into more detail about what those are. The complex and opaque financial relationship between the many entities within the chamber led to intermingling of funds, and inadequate documentation of expenditures led us to be unable to verify all the expenses that were charged on the invoices. Related to this is the second finding you'll see here, is that the MRC, our subrecipients, did not disclose the diversion of assets as required by the Grant Agreement and the False Claims Act and under federal regulations. We discovered the diversion in public reporting and weren't informed proactively as required of the fraud investigations. Third on this list is that MOVE charged in-kind donations as direct costs. So during the 2 years that we reviewed, MOVE charged over $65,000 in in-kind donations to the council. So in-kind donations, there was different examples of these, but one example was in-kind rental expenses, which were given at no cost, but then were assigned a value and charged to the council and reimbursed at 80%. This is unallowable according to federal regulations, and we found that 20 of the 23 invoices we reviewed included documentation on these donations. The real problem here, though, is that the same in-kind donations were used twice, once as the local match, which was 20%, as Lakshmi said, and then once also as a reimbursement for the council, which is unallowable. It is allowable, however, to use in-kind donations as a portion of your local match, just to be clear. I was talking about rent. We also encountered other challenges with rent. Rent did make up a large portion of the in-kind donations, but rental expenses were also included in non-in-kind donations. We found that rent-related expenditures were inflated by over 50% as compared to the actual invoiced bills from the landlord and the lease agreement. This resulted in $50,000 of unsupported payments over the 2 years that we reviewed. The reason why this occurred, rent was actually being based on estimates at the beginning of the year. However, no documentation was provided to audit on how this estimate was calculated. It may have included unused facilities or depreciation, but we weren't able to support this distinction. Now moving on to number 5 on the screen here. MOVE did not comply with cost allocation guidelines. Again, this is kind of related again with the rental expenses and other overhead costs, which are indirect expenses, so not directly tied to the program, but things that might be necessary for a business, but not directly related to programmatic activities. Federal regulations have 3 ways that you can apply indirect costs or charge these overhead costs. The first way is to use a de minimis rate, which is what was elected on the grant agreement originally. You can use a negotiated approved overhead rate, or you can have a cost allocation plan. This was the method that MOVE attempted to apply after the fact by providing an affiliate agreement. However, the affiliate agreement did not contain adequate detail or a consistent cost allocation basis that could be considered a cost allocation plan by federal standards. It also wasn't approved, which is another requirement. This all poses a significant risk of billing unallowable expenses or misallocating those indirect costs, especially when there's multiple entities operating in the same space. And lastly on this slide, commuter programs, which is the entity overseeing this group in Metro Transit, did not route the agreement to the Office of Equal Opportunity, and this resulted in no disadvantaged business goal being set. This oversight could have deprived disadvantaged firms of the opportunity for subcontracting as well, and at the time posed a compliance issue.
Mr. Chair,
Yeah,
I'm
but,
sorry if I'm getting ahead of myself again, but I'm trying to understand what the exposure to the Metropolitan Council is, what the risks are from a single audit perspective. So I'm trying to understand who the subrecipients are here and to whom they are subrecipients. Is that maybe in a graphic here somewhere? Or?
Yeah, Chair.
So I'll just specifically, is MRC a subrecipient of the Met Council? Or is MOVE Minneapolis a subrecipient of the Met Council?
Chair Lee, members of the committee, You will find in section 3 a finding relating to our subrecipient agreement. But just to clarify off the bat, our subrecipient agreement is with the Minneapolis Regional Chambers. However, we were directly reimbursing Move Minneapolis without an associated subrecipient agreement. So that is a compliance issue, which we identified in section 3. And I'll get into more details on that too, but our agreement was with the Minneapolis Regional Chambers for the years we reviewed.
So the second part of that, where the Metropolitan Council was sharing funds with Move Minneapolis directly, that was done through us, there was just no.
There was not a method, it was a compliance issue. Funds should not have been dispersed without a subrecipient agreement. That's correct, yeah.
Got it. Thank you so much, that helps a lot.
Okay. Moving on to the financial controls aspect. So our financial controls, as we mentioned, the poor financial controls led us to the inability to be able to confirm that the diversion of assets didn't impact the federal funds, but we want to give an overview of what some of those are. According to the federal indictment, the former CEO was allegedly able to falsify vendor files, misuse company cards on personal expenses, create fictitious invoices, siphon donations into other bank accounts, and all of these indicate severe control gaps in multiple areas. In addition, during our on-site visit and review, Audit noted additional control weaknesses such as poor and undocumented accounting practices. There was a failure to segregate duties. For example, accounts payable and accounts receivable were not separated. There were familial reporting lines, a son reporting to his mother within the financial reporting chain. There were governance failures and undocumented governance structures, and all of these can create risk and lead to the inability to trace the funds. It is a compliance issue. Federal grant management standards require that expenditures be charged to the grant be clearly distinguishable, and when you don't have a system of control, it's hard to do that. Subrecipients, it's incumbent on them to establish and document and then maintain effective internal controls, and that was not done in this situation. The second on this list is that invoices were approved with inadequate documentation of costs. According to federal regulations, costs have to be necessary and reasonable, and in order to determine whether costs are necessary and reasonable, you need to have good documentation. Some examples of inadequate documentation we saw was insufficiently detailed or illegible receipts, credit card statements in lieu of receipts, gift cards which were purchased that then obscure the actual items that may have been purchased later, and also general lack of support and receipts attached to invoice for recurring expenses and personnel costs. For example, none of the invoices contained certified payroll, hourly rates, or timesheets, and recurring cost documentation across a wide range of categories was missing. Move also invoiced excessive, undocumented, and unallowable insurance charges. Some liability insurance is allowable under grant standards. In fact, it's actually required and necessary for certifications and assurances. However, charges for cyber insurance and directors and officers insurance were not approved. And moreover, in these cases, Move was not explicitly listed as a named insured, so may not have reaped the benefit of these policies. And furthermore, directors and officers insurance can cover punitive liabilities, which is unallowable according to federal regulations. Lastly, on this slide, Move salary and fringe could not be reconciled. As we mentioned, there were not salary documents attached to the invoices, so we performed an additional salary review. This is a graphic showing our salary variance analysis. This chart shows the comparison between what was billed or what was invoiced to the council. So in blue, you'll see that's what we were invoiced. And orange is the estimated amount of staff time. It's an estimate because it includes certified payroll plus an estimate we made calculating the shared staff's time. Shared staff wasn't systematically tracked, so this actually is a generous estimate. The average variance we saw over the course was around 7% over the course of the 13 months that we reviewed. Now I'm going to move on to programmatic oversight. So grant oversight, you'll notice, was not a specific objective of this review, and it did narrowly cover only Move Minneapolis and under that the TDM program as well. But we did identify opportunities to improve our own system of controls relating to subrecipient monitoring. So now we'll go over a few of the areas we have of findings related to programmatic oversight. Okay. Programmatic oversight. Our first section goes back to the actual awarding of the grant. Our Transit Advisory Board awards grants during competitive regional solicitation. However, in this case, these funds are uniquely awarded uncompetitively in an undocumented and non-competitive selection process. We rely heavily on internal assumptions about the unique role of TDMs, and we have these as set-aside funds, but haven't defined the term set-aside. Audit thinks there's a significant opportunity cost here to not having a competitive process for awarding these funds. And then number 2, MOVE did not adequately measure and document their outcomes. So our second objective was to review programmatic documentation. We did perform a review of the program documents. The majority of the documents that were provided were in the drafting or planning phase, and approximately half of the identified KPIs did not have outcomes documented, making it challenging for us to determine if the program is effective. Number 3, you'll see that MOVE Minneapolis, which is a subsidiary of the Minneapolis Regional Chambers, received federal funds directly without a subrecipient agreement. This is the finding that I was referencing earlier. So the 2 entities do maintain separate EINs and would be required to have a formal subrecipient agreement to receive funds directly. Fourth on this list, Metro Transit did issue the subaward to a unique entity identifier with inactive federal registration. So the inactive entity was the Minneapolis Regional Chambers. Their registration expired in 2022, so approximately 2 years before the grant agreement was actually executed. Maintaining an active UEI is a federal requirement, of course, but it also serves as an indicator that the proper certifications and assurances have been achieved and that the entity is eligible to receive funds, or in other words, it hasn't been disbarred. Now, 5th on this list, the last 3 items on this are a little unique. These are not related to necessarily the objectives, but they were incidental findings as we went along. All 3 relate to findings that Audit has had in the past, and so they have a separate recommendation, and I'll kind of identify some of those areas. The first of these is that Metro Transit processed partial grant payments without a supporting policy. While this did keep us within our NTE threshold, so MOVE Minneapolis had burned through the majority of their allocated grant funds for the year, and then that resulted in a partial payment on their final invoice of the year. There wasn't a policy for the partial grant payments, making it challenging to know if the funds were applied to which costs. 6, we have MOVE received 2 incorrect payments on a blank purchase order, and both of these were late, ranging from 300 to 700 days late. This was the incorrect entity because MOVE Minneapolis was not the person who was billing. The payments were intended for a different entity that is in the same building or shares similar space to the chambers, and it was executed on a blank purchase order, which is an area that we've identified as weakness before. And this is a large weakness in vendor file management, which is another audit we've looked at in the past. And lastly, on this programmatic oversight piece, a duplicate payment wasn't identified in a timely manner or corrected according to best practices. So Aimee invoice in 2021 was paid twice, but instead of being refunded, a payment for the next month was missed, and then a following month was discounted. So basic accrual and matching accounting would tell us that you have, in order to clearly and accurately trace the payment, it has to be applied to the same time period as the expense. And also, there was not a policy for this correction that was followed. So in conclusion, what I want you to take away from this presentation is that conditions strongly suggest a high risk of misuse of federal funds in this instance. We identified many unsupported or unallowable costs. We identified many out of compliance areas with both the chambers and MOVE Minneapolis. These all put into question their ability to be a good steward of public funds. There's also some large areas and opportunities to improve our own TDM program and grant oversight. In terms of recommendations, we typically have what you might be used to seeing is one recommendation per finding. In this case, many of the areas overlapped with similar root causes. So we have consolidated our recommendations into 4, and all of these are targeted at the council. Our first recommendation is programmatic restructuring. So we believe the council should restructure the travel demand management program to ensure alignment with the federal requirements and council goals. This restructure should contain a few things, including an assessment of program staff, knowledge, skills, and abilities that are needed for effective grant management. It should also evaluate that process that we mentioned for selecting and awarding recipients, as well as the placement of the program. Secondly, relating to internal controls, to comply with federal requirements, the council should develop and document a formal procedure outlining additional oversight and control measures for the entirety of the council. We do have a subrecipient monitoring guidebook, but it wasn't in use by all members of the council. As I mentioned, we're following, these were decentralized grants. Areas that we would like to see controls specifically identified or controls improved in this documented process are the indirect cost rate application, payroll verification, the allowability and allocability of those incidentals, things like insurance, gift cards, travel, items like that, program activity monitoring, UEI verification, risk assessment, and disadvantaged business goal setting. Our third recommendation relates to those last 3 findings we discussed. We did run across continued problem areas that we've seen in the past. So we recommend that the council adopt a cross-functional group to address continued improvements related to the weaknesses we observed in vendor file management and improper payments. And then finally, we do recommend remediation. We are under obligation to pursue fund recovery. We recommend the council pursue suspension and debarment for entities in violation of the grant terms, recover unallowable or inflated costs, and then notify the FTA of these actions and the outcomes. I will say that the FTA has already been notified. The OLA and the OSA have also been notified by staff. In terms of other management actions and management responses, management agrees with all of our recommendations. Subrecipient oversight is going to be consolidated. TDM grant administration will be moved to MTS or CD, where there's more grant experience already in existence. MTS planning has added capacity and is continuing to implement the 2023 Regional TDM Action Plan. The tab is clarifying its use of competitive-based funds and set-aside funds. There is a structural review of the TDM service delivery model. A cross-functional group is being established this month to address the ongoing concerns about vendor file management and accounts payable, and a full accounting of grant funds is being demanded for the allowable look-back period. And it is important to note that the last payment was made in April. So while this audit was ongoing, the payments were suspended in April. And the $478,000 allocated for 2025 will not be dispersed pending the outcome of the suspension. And so with that, I will open it up to any questions.
Councilmember Barber.
Thank you, Mr. Chair. Just because we have a couple of fairly new council members here, I would really like you to elaborate, or Matt, as to what prompted the audit and when it was initiated.
Thank you.
Sure, Mr. Chair, members of the committee. So we have done some advising in this space over time. We did see the public reporting in the Star Tribune about the resignation of the CEO of the chamber. Knowing that we had federal funds involved, we added this to the audit plan last fall, I believe. It was in the October meeting, and started the work in earnest in November, December last year, getting information from the chambers and Move Minneapolis to start the audit work.
Thank you. Mr. Chair?
Yeah,
And also, as was mentioned, we did start withholding disbursements to the organization. And can you tell me about the amount of funds that are in question at Move versus what we have withheld?
Mr. Chair, members of the committee, I believe the number that we've withheld is somewhere in the neighborhood of $400,000 to $500,000. And the annual grant for Move Minneapolis is about $480,000.
All right, thank you.
Any other questions? I have a quick question and comment. My question is there no requirement for subrecipients to tell us ahead of time if one of their employees is indicted for embezzlement? And my comment is, Matt, I hope we have a running blacklist of folks and orgs not to pay ever again.
Chair Lee, members of the committee, I just want to clarify, at the time and inception of this audit, an indictment had not been begun. That actually occurred just a month ago. This audit initiated much before that, many months before that. So following the resignation of the CEO in April of 2024, if that clears it up. And in terms of we don't like to call it a blacklist, but suspension and debarment is the tool. We have a policy at the council for suspension and debarment, and that's the process that's being followed in this case.
Oh, any other questions?
Yeah, Mr. Chair, I have a question. Have you heard from your state auditors? Have they commented at all in terms of the impact to your own single audit as a result of sort of the shortcomings that you uncovered related to subrecipient monitoring, which is your requirement?
Chair Lee, members of the committee, we did report to the OSA. I'm going to actually hand that off to Matt because I was actually on vacation for that day. So he'll be better at telling you.
Good move on your part.
Mr. Chair, members of the committee, so it's probably noteworthy that the funds withheld are for this calendar year, so that's still the audit for next year. In previous years, we haven't determined yet, as of yet. I mean, think about the audit, it was a sample of expenses that we looked at. I think there's still an open question about what was unallowable, what changes may need to be made, and also what impact any FTA review might have on this. So we've had the discussion with them to start that, to make sure they're aware. This is ongoing, but we have not had any guidance from them as of yet.
Yeah, go ahead.
Thank you, Mr. Chair. And I will note that the feedback that we got from the OLA was that very complimentary of our audit department, and also a thank you for our transparency of bringing them the information.
Mr. Chair, that's good to hear. I'm just thinking through, we get involved a lot with our single audit, so I'm thinking through the requirement that you have to be doing subrecipient monitoring and the evidence that your auditors are going to look for to see that you had been doing that. So it's just something, it's a risk, I think, that you're going to have some exposure on that, I think, with the next audit.
Mr. Chair.
Yeah, go ahead. Zakowski.
Yeah, on page 12 of the report, you kind of lay out the scope limitations, which is understandable that you're really only auditing the Move Minneapolis entity. But then it mentions that there are 3 other TMOs that receive the CMAQ funds. And I'm just wondering if someone could explain what is the extent or nature of the subrecipient monitoring for the other 3 entities, and are there plans to audit those entities as well, or anything that you found out regarding that?
Yeah, Mr. Chair, members of the committee. So I think it is worth pointing out that this is a unique structure within the council in terms of subrecipient monitoring. It's only these 4 subrecipients that have the same organizational structure in terms of how they're monitored. The other 3 entities are managed the same way. It is something we've considered. I mean, I'll just say honestly, this took a lot longer and ate up a lot more of our audit plan than we had planned on. So it's an open question we've had with management about, what's the next steps we have to do in terms of looking at other similarly situated subrecipients. So it's an open question that I think we're still pondering about whether this is the next step that we would take. But it is also weighed against the many other risks that we face as a council, and thinking about, is this what can we take, and what terms of like how much depth do we need to go into, or is there some sort of interim step we could take of maybe doing some sampling or something like that, or have the business units do some of that work.
Okay, thank you.
Mr. Chair, I
yeah,
would just want to comment about the risks associated with your single audit and not being in conformance with the OMB requirements. I think they're pretty clear in terms of what you need to be doing when you've designated someone as a subrecipient. So it seems like you looked at that to some degree in terms of, in your recommendations, address some improvements in that area, but I think that's a high risk for this organization.
Any other questions? No, go ahead. Councilmember.
No, go ahead.
No, just for a rookie here who's trying to figure out what's going on. Chair, Matt, please feel free. So how did you catch this red flag? So as she was going through it, my eyes and head were just spinning. Like, is this something you usually do to every contract, or what triggered this? For example, how did you? Again, rookie question, sorry.
No, it's, Mr. Chair, members of the committee, it's a good question. I mean, I think that part of our job as audit is to keep an eye on red flags. I mean, we track the news, we watch the council meetings, we do a lot of different things, speaking with management on a number of, so, you know, when this was publicly reported. So that was, I mean, really, that's how we learned. Decided to take this next step to do this audit work. But
Awesome.
It's one of many things we do to manage and monitor the risk of the council.
Thank you. Thank you.
Councilmember Barber.
Thank you, Mr. Chair. To definitely address your concerns, I think that if you look at the management response, we really focus on grant monitoring and subrecipient grant monitoring and moving it to the CDMTS group who has more of that expertise, but also building better, improved systems even as we onboard a new grant recipient and throughout the process. And so this is really kind of our action plan. While this was something that was associated with wrongdoing in a different area, we're taking this opportunity to make sure that we have the robust systems in place so that we catch something like this sooner.
Thank you.
Any other questions?
No, I think that answered
My question is, how often does TAB give out non-bid contracts?
Chair Lee, do you mind repeating the question?
Yeah, how often does TAB give out no-bid contracts?
So this wouldn't be, I wouldn't consider this a no-bid contract. And part of the problem here is that it's a little undefined, these set-aside funds. There isn't a requirement for these funds to be competitively distributed. However, there is an obligation to choose the programs that are most effective and most economical. So competition is a good way to achieve those results, but a competitive selection isn't necessary. And what we've been told by experts in the area is that these TDMs serve a unique function. And so the decision to do set-aside funds is unique to this area. However, if there are any other set-aside funds, I would open it up to we have some staff here today who might be able to answer if there's any other areas that we set aside funds or designate specifically for certain entities.
Okay, thank you. Councilmember Barber.
Thank you, Madam Chair. I can answer some of them and then defer to the Director of MTS if needed. So the regional solicitation occurs every 2 years. This is one element out of that entire package. There are two different areas, the TDM and the travel behavior inventory, that are more in the non-competitive realm. However, what we do also every few years is we go back and look at how we actually do the regional solicitation. We're in that process right now, and we'll have actions moving as we move throughout the rest of this year to define the next regional solicitation, and we will be able to work some of this information into that next process.
Okay, thank you. Any other questions, comments? All right, thank you for your presentation. Our next report is small purchasing. We have Timothy Larson, Brynna Bargfield, and Aimee Gillespie, and Ian Klein.
All right. Good afternoon, Chair Lee and members of the committee. My name is Brynna Bargfield. I'm joined by Aimee Gillespie and Ian Klein. And for our review of small purchases, this is an area where audit, historically, we've looked at micro purchases, which are those smaller than $10,000 or under $25,000 if it's an MCUB. And we've also looked at a number of contracts and other purchases over $175,000, excuse me. And small purchases are one of those areas in the middle. So one of the reasons why I wanted to look at these is because looking at how controls work at this level helps inform how they work at all levels. Small purchases, in this example, we looked at purchases between $10,000 and $175,000 that were made using purchase orders. So that includes goods and general services. The wrap on the light rail train in the photo here is an example of something that might be purchased as a small purchase. And this image here is an excerpt from Procurement's How to Purchase matrix at the time of the audit. The highlighted section represents small purchases. We had 3 main objectives for this project. The first was to ensure that system controls support the procurement and payment functions in PeopleSoft, TXBase, and WAM. For those who are newer to working with the council, PeopleSoft is a system that we use to process payments, and TXBase and WAM are both programs that are used for requisitions, inventory, and purchase orders. TXBase is used by Metro Transit. The other divisions primarily use WAM. Our second and third objectives were to ensure that all requested project and project amendments, as well as the receiving, documenting, and payment processes were in compliance with state, federal, and council policy, procedure, regulations, et cetera. And I'm going to hand it to Aimee for our first finding.
Great, thank you, Brynna. So the first finding of this audit reads that audit could not obtain a list of change orders or amendments. So the original intent of this testing was to look at the approvals of change orders and amendments applied to POs. We aimed to verify that each change order received the correct signature authority, as well as to ensure that change orders didn't push the PO above the small purchases threshold. However, we could not complete this testing as planned. When we tried to obtain POs that had change orders applied to them from TXBase and WAM, we learned that neither system differentiates between change orders and simple edits. So we received a massive list of POs that had been changed for any reason. It could have been a change order, but it also could have been address changes or spelling changes, small things like that. We could not tell the difference. There were 2 separate but similar causes for this in each system. First, in TXBase, TXBase does not process change orders at all. Any change orders that are requested need to be processed via email with procurement. When we talked to procurement, we learned that this happens so infrequently, they weren't able to provide us any examples of that. Within the WAM system, WAM does process change orders, but we couldn't access them. One reason for that is that WAM users are able to recycle purchase order templates, making those purchase orders appear that they have been edited when they haven't. And then we also weren't able to search for change orders using the change order number, because once a change order is applied to a purchase order, it sort of sheds that identifying number, so we weren't able to find it that way. In conclusion, because we weren't able to obtain a list of change orders or amendments, we could not verify that those change orders received the proper level of approval or that they didn't alter the PO's threshold in small purchases. I'll hand it back to Brynna.
Thank you. Our second finding relates to the use of annual purchase orders. These were originally intended to make it easier to get after-hours or emergency services by previously setting aside a pool of money to be used for multiple micro purchases. However, this use expanded beyond that original intent, and a number of the challenges we saw with annual purchase orders is because they were being treated like micro purchases rather than the small purchase that the dollar value means they should have been. As part of testing, we reviewed a list of combinations, so instances where the same department was making multiple purchases with the same vendor for the same purpose, and of those, we saw that annual purchase orders were associated with combinations that looked like they could potentially be split purchases. In these situations, there was often either a slight difference in terms of the type of facility where the service was being performed or the account string. So they were not truly split purchases, but in the intent of avoiding the perception of that, we still marked them as an area of concern. Annual purchase orders, also because they were treated like micro purchases rather than small purchases, often were missing quotes because micro purchases don't need to get multiple bids to select them. And they also weren't reviewed for whether or not they were a split purchase, which we believe, based on the results of our testing, that review process works when it is used. There have been some changes made to the use of annual purchase orders this year, and so we will be able to retest this starting early next year. And finally, Ian will go through our last couple findings.
All right, so our third finding concerns the use of after-the-fact forms at the council. So if a requester receives a good or service without an approved PO ahead of time, the requester must complete an after-the-fact form. On this form, they explain why they did not go through the proper procurement process in getting the requested good or service. And so in 2024, there were 13 after-the-fact forms for small purchases. Audit reviewed these forms and found that 7 of them had preventable causes, such as improper planning by the requester, unclear responsibility for handling the renewal of services, and then poor communication between departments during the procurement process. Our next finding is that the processes for sole source justifications can be improved. So in limited circumstances, the Met Council can use a non-competitive procurement process. One example is the sole source process. This is when one and only one vendor can provide the requested good or service. To start this process, the requester completes a sole source authorization form where they justify the need for the sole source process. This form is then sent to a team led by procurement staff who review the justification for the sole source process and provide their own comments. So we took a sample of 22 of these forms and found that 11 of them did not include documentation of the independent research done by the procurement review team to verify that the vendor was the one and only source for the requested good or service. It should also be noted that in our audit, we were reviewing procurement policies and procedures. These procedures do provide guidelines for using FTA funds for sole source purchases, but they did not cite the specific federal statutes or regulations. And then our last finding concerns the controls for signing sole source authorization and after-the-fact forms. So figure 1 shows the multiple steps that a sole source authorization goes through. It starts with the requester, goes to their manager, the procurement review team receives the form, and then the procurement director assigns a signature authority for final review and approval. However, audit found that 7 of the 22 forms we reviewed had either an incorrect signature authority or unclear rationale for the employees listed on the form. So as an example, there was one form where a bus operator was listed as the signature authority, but this bus operator had no history of signature authority status. We also found that the controls on these forms enable an improper routing process. So as shown in figure 2, audit found that it was possible to skip both the manager and the signature authority in the routing process of the form. Procurement has been working on updating their forms. They updated their forms in September of this year, in part to address issues such as these. And with that, we will take questions.
Any questions for the presenters? Councilmember Jenkins.
Thank you for the presentation. My questions are more so on the first 2 findings. Could some of these misses have been addressed by the software? You mentioned that WAM and TX are end of life and being moved. Are these issues that can be addressed with new software?
Chair Lee, members of the committee, thank you for the question. I believe that new software was part of the management response. Like you had mentioned, the systems are sort of at the end of their useful life. So when new systems are eventually procured, that would be one of the goals, is to include a function like these, like those recommendations into the software.
And then my follow-up is, and I know this is a future software program, so I guess it's more of a rhetorical question. is it going to be required that the software, that form, that chain of process be followed? Will there be manual exceptions in their processes that then, again, become important for us to monitor and be aware of?
Chair Lee, members of the committee, I think in terms of any specific system requirements, I would invite procurement if there's somebody here to speak to any potential requirements in the system.
And it's as much process as the software, knowing software, but what commitments can you make to that?
Thank you, Councilmember, Mr. Chair, and council members. Robert Carey on behalf of Jody Jacoby, our Chief Procurement Officer. We believe that the modernization of a encumbrance-based procure-to-pay system will correct and create some of the efficiencies that we're dealing with now in the antiquated models of TX-based and that.
Thank you.
Chair Barber.
Thank you, Mr. Chair. I have a procurement type question too. So, and this may be less to do with these small purchases, but more the sole source documentation. As you know, when you've presented, especially a transportation committee, that comes up a lot as to why. And so I'm really curious what kind of additional processes or how are we going to track some of that? Because that's one of the questions you often get from council members.
Yeah. Mr. Chair, committee members. One of the areas on the sole source that procurement's looking to implement as another avenue of verification to support that rationale of a single provider is to advertise the intent to procure by method of a sole source, unless that there is another agency or an entity that could provide those services or those products.
All right, thank you.
And that is a FDA best practice.
Yeah, that's great.
Any other questions? Yeah, go ahead.
I do. Maybe it's in the material that I missed. What are the consequences for, I mean, I'm assuming like we can have the software and a system set up in the software, but I'm assuming we have some requirements around how these processes are adhered to, right? Compliance with the process. Because the software won't drive the process, right? Or the requirements. The requirements will help us inform the software setup. So my ask is, what are the consequences for staff that don't comply with the process, even if there are ways to get around the software? And there will be, right? So are there any sort of consequences, either performance-wise or compliance-wise?
Yes. So some of the recommendations for Ian's finding on after the fact forms is to establish a monitoring as well as an escalation process. So we've asked procurement to set thresholds or some other criteria and document how they're going to follow up with situations where the same department is having repeated, potentially preventable after the fact purchases. In terms of other areas where people may be sidestepping procurement, that would be up to management in some instances. And if they are told that they can't do an annual purchase order, but they proceed and purchase it anyway, then we would be in an after the fact purchase situation again.
Okay.
My question is about the documentation for sole source purchasing. If there's signatures missing or like the authorized signature is wrong, was that because it was a manual process where we're carrying around a piece of paper from one department to another department? And how would that change with how exactly would that change with the new software?
Yeah, so Chair Lee and members of the committee, our audit reviewed, again, sole source authorization forms, and it is a manual assignment, or at least the process was a manual assignment of the signature authority status by the procurement director. So that would have been the cause for the root cause of some of those incorrect signature authorities that we found in our audit. In terms of the new software, that would be, I would pass that on to the procurement department if they had any responses on that front, but that's part of our recommendations, again, is to ensure that the correct staff have reviewed before approving a sole source request.
As to speak to your question on the internal routing.
Yeah.
The current system, which is in-house now, still has manual entry required. We can look to work with our IS department to establish, and the reason for that is it's based on the signature authority is based on the value of the sole source that they would procure. And so we have to look at identifying what that is on the back end and then route that. We can work with our IS department to see if we can establish the entry of that value aligning with where the signature authority would be automatically.
Okay, thank you. Any other questions?
Chair
Yeah, go
Dean.
ahead.
So you looked at $71.9 million of expenditures, right, for 2024. Do you know, is a funding source for that money a combination of federal and other funding sources?
Yes, so the total amount of purchase orders within our scope was that 72 million. Our sample picked a different subset, and because we did different, we used different samples for the different portions of testing completed, so I don't have a number for the total dollar value that we covered through our testing. But to your question about funding source, yes, there was a mix of local and federal.
Just in terms of priority and kind of getting to your question to compliance, in terms of addressing these issues, if it makes sense, it would behoove you to probably focus on addressing the organization, to focus on addressing the purchases that are made using the federal dollars. The compliance requirements are pretty clear on that, and the consequences of not following that, can create some significant risks for the council.
Any other questions or comments for presenters?
Bless you.
All right. Thank you for your presentation.
Thank you.
Our next presentation is the Go Line contract closeout with Robert Bright and Ken Brzezowski with Talson Solutions.
Mr. Chair, members of the committee, for those of you new to the committee, and just a reminder for those that have been on the committee, Ken and Robert represent Talson Solutions, which is a co-sourced auditor that we've been using for the last 2 years, year and a half. It's just a reminder, and you'll see this is one of the results of their work. And then when we go to present our audit plan, there's a subsection within the audit plan that we'll present next month that'll have the plan for Talson's work that primarily focuses on capital construction around the council. So just wanted to have that reminder before they start the presentation.
Thanks, Matt. Yeah, go ahead.
Excellent, great. Good afternoon. Pleasure to be here. We do have a detailed presentation. We will try to be brief as we walk through it. We do have two items, as Matt mentioned. The first one we'll present on is the construction closeout audit of the Go Line BRT project. First, just want to make mention that Talson Solutions, we're an independent capital project consulting firm. We were engaged to conduct the construction closeout audit of the BRT. The BRT was a project that was a design bid build project delivery method. It was funded in part by a full funding grant agreement that totaled $239 million from the Federal Transit Administration, which went towards the total project cost of about $505 million. Ames Construction served as the general contractor for the project under a unit price lump sum agreement. Today, I'm going to talk through our engagement objectives, work performed, project background, audit results, observations, and then certainly answer any questions that you may have. The summary of our presentation is based on the full audit report that was issued in September of 2025. The audit included two primary objectives. First was assessing Ames compliance with their contractual provisions in 4 specific areas. These included cost and change management, cost reporting, construction management, and DBE monitoring and management activities. The second objective was to assess mass transit's project management oversight practices in similar areas: cost and change management, cost reporting, DBE monitoring and reporting practices, and overall project administration. In terms of the scope, we had 5 core areas within our audit scope. They included verifying compliance to close out contractual requirements, reconciling project cost, reviewing payment applications, compliance activities with the full funding grant agreement, as well as evaluating adequacy of project and administrative oversight. The work performed included facilitating an entrance meeting with the council's representatives, which included identifying the project objectives and scope. We performed an on-site visit of the actual project. We evaluated various project documentation, including cost reporting and closeout practices. We included on-site interviews as well as virtual interviews as part of our audit program. We verified corrective actions from the April 2025 OLA report focused on the Southwest Light Rail project. I'll speak about that momentarily. And then we issued draft and final audit reports, which included observations in the areas of change management, handling of soils, DBE management, and other areas. I do want to note that Talson's audit is conducted in accordance with the international standards for professional practice of internal auditing as issued by the Institute of Internal Auditors. Audit results. The audit found that Metro Transit and Ames oversight of the Gold Line was consistent with industry standards. Ames was compliant with contractual obligations and deliverables. Talson noted several overall improvement areas from oversight from the Gold Line project management team as a result of findings from the OLA South Light Rail Transit project. We did note enhancement opportunities in 4 areas that did result in 6 observations. Those areas of enhancement opportunities included enhancing accuracy of change order reporting, improving visibility of material quantity increases, documenting contractual closeout procedure obligations, and enhancing DBE monitoring of timely payment verifications. Those 4 areas, as mentioned, did result in 6 observations within areas of change management, cost management, and recommended follow-up from the OLA audit report. I will go through each of the observations briefly. I will pause for any questions as I describe each of the observations, the recommendation, and the resulting management response. Observation 1 relates to discrepancy within reporting regarding change orders. Talson noted a discrepancy within payment application number 29 for the period of January 2025 of approximately $427,000. This item was noted to management. Recommendation was that Metro Transit should consider implementing a standard cross-checking reconciliation process to ensure consistency among documentation provided within the payment applications. Management agreed. Observation number 2, material quantity increases were not reflected in the revised Ames contract amount. Payment application number 29 included a contract value of $254 million, while supplemental reporting showed a contract value of $255 million. This approximate $1.9 million variance was due to material increases that were shown within the documentation but not yet formalized within a change order. Recommendation was to establish a reoccurring reconciliation process to track and document quality overruns. Again, management response was in agreement with the finding. Observation number 3 related to limited closeout tracking documentation and requirement within contractual obligations. This particular observation related to Ames did not maintain a subcontractor closeout matrix to monitor completion of key deliverables such as warranties, as-built, operating manuals, and other payment-related items. Recommendation to Metro Transit was that they should require contractors to maintain a subcontractor closeout matrix, listing all subcontractor obligations and closeout obligations of their performance contract. Management response was in agreement. Observation number 4, 5, and 6 all relate to the OLA audit report for the SLT project. As part of our audit work, we did include additional work plan testing activities based on those findings from that report. Observation number 4, Talson did note that there were variances between Met Council and Ames DBE payment records. Discrepancies were noted amongst payment records and the contractor monitoring system for 6 of the 10 sample DBE firms. Variance ranged from $200,000 to $211,000. We do believe that these variances were primarily due to the multiple contracts that were awarded to the DBE vendors. Our recommendation was that Metro Transit's Office of Diversity and Equal Opportunity should implement a monthly reconciliation amongst the CMS system and contractor payment reports. Management response has agreed, and we understand that they have already undertaken steps to enhance this monitoring process. Observation number 5, delayed payment verification in CMS. As of March 2025, multiple DBE payments recorded by Ames in the CMS system remain unverified by the DBE firms and therefore not recognized as allowable credits. Recommendation was that ODEO should require DBE firms to verify payments in CMS in a more timely manner. Management response agreed. We also understand that there has been recent steps taken to improve the timeliness and verification of process payments within CMS. And finally, observation number 6, incomplete commercial useful function verification. Commercial useful function verification documents for DBE firms was incomplete. Of the 10 DBE contracts reviewed, only 5 had required documentation, which included field observation reports. They were missing key information such as project name and contract numbers. Only 1 report included photos and other verification that was required. Recommendation: Met Council should standardize its DBE field observation report to capture key project contract and labor details and require regular documentation. Management agreed. At this time, I'll just pause and see if there's any questions in regards to the contract closeout audit report.
Any questions for the presenters? Go ahead, Chair Barber.
Thank you, Mr. Chair. Just a comment. Just want to say thank you for including the comparison to the OLA's Southwest Light Rail audit. I think that's really important because it shows that we're taking the learnings from the OLA and applying them to construction projects, even when they're sort of happening in real time. So that's really important to me to see that not only are we just responding and saying we're going to do these things, we're doing the things. So I really appreciate you guys including that into this.
Yeah, I think if within our detailed audit report, Appendix A summarizes the previous findings. We did note compliance and improved areas within 2 specific areas, one relating to change management and the second related to the recording of contaminated soil disbursements.
Very good. Thank you.
Any other questions? All right, thank you. You have,
Great. Before I pass it on to Robert, I just want to say thank you to the project team for its participation and support during the entire audit process.
Thanks. You have the next presentation as well, Gold Line Land Acquisition.
Yes, thank you for this opportunity to present our findings regarding the assessment of the land acquisition and procedures and process for infrastructure projects. Subsequent and doing this review, it was requested by the audit committee to take a look at the land right-of-way acquisition processes for the council in light of the various large infrastructure transportation projects underway. So just kind of the agenda is very similar to what Ken just presented. We will go over the engagement, the scope, work performed, executive summary, the results, and just really have a general question. Engagement objectives is really to take a look at the council's right-of-way acquisition procedures as they relate to large projects. As you well know, the council itself takes on various large projects, Southwest, Blue Line, Gold Line, and so forth. And that acquisition process is critical In that process, portions of it is federally funded, portions of it is funded by the council, the various counties. So looking at it, the stakeholders in which we, primary stakeholders in which we interviewed and really had conversation and assessed is the Regional Administration Office, Council, the Real Estate Office, as well as the Finance and Administration Departments. Metro Transit, quite naturally, we'll talk to Asset Management, Engineering Facilities, and the Finance and Grant departments within that, and quite naturally, Minnesota Department of Transportation. Our work performed and our key focus areas really, let's take an understanding of the various statutory requirements, not only the federal, but Minnesota state statutory requirements, the various roles, external, internal, and the overall acquisition process. Kind of take a look at and review the governance structure, the organization, the project team, the real estate office, Metro Transit, as well as MDOT, kind of Minnesota Department of Transportation. The file and the systems, quite a bit of documentation when you start looking at right-of-way acquisition. I don't know if anybody's involved in real estate purchases, but it could be voluminous, especially for a project like this, and as well as tedious. But we took a look at the documentation, what's the requirement for Met Council, what's the requirements for Minnesota Department of Transportation, and look at the various systems in place. We took a look at the communication and the various, between the various agencies and support groups. Look at, especially between MDOT, Met Council, and the various counties, as well as take a look at the various agreements in place, your joint power agreements, operations agreements, and other agreements subsequent to kind of revenue service date in 2025. Just to give you an overview of the gold line acquisition process itself, they had a budget of approximately $44 million. That was increased to approximately $49 million. It did require, the project team identified 162 parcels requiring some form of acquisition, including 14 public properties. They required 58 relocations. That did occur by December 22. There's been successful acquisition of 142 acquired through offers. 22 parcels still remain outstanding today. The value of that's only about $9 million. However, there's one particular property where it's under major dispute because, quite naturally, the owners are kind of assessing the property much greater than council, and we understand that's going to go into 2026 for resolution. There is a snow removal agreement for 100% of the 10-mile right-of-way with Washington County, and there's signaling agreements in place for that. Our overall assessment is quite positive. We really did not identify any control deficiencies within the overall process. We will say the project team worked closely. Since very early on in the project team, it was identified the resources required from Minnesota Department of Transportation. They had their full support, the project team was in communication, also with the real estate office. So overall, very compliant process. And really what we took away from that is not any identification of what I would say critical elements, but identified some process improvements, insights for future projects as you continue to build out your capital program, as well as one best practice related to transit-oriented development, which we understand is critical to the council. So the first in process is looking at your real estate office. And the question becomes kind of how much do you want to strengthen it? How much you want to keep in-house? How much you want to keep internal? So that decision, but there is opportunities to strengthen that, that office with additional personnel. Also looking at, the assessment of the project schedule. A lot of these right-of-ways require easement. Sometimes it's a little too early. Sometimes you have to negotiate the end of the project to continue an easement. Just kind of do, let's take a look at alignment of the cost of the easement, that right-of-way, and match it kind of more aligned with the overall project's schedule. One, during the interviews, a question came up regarding the acquisition strategy on various purchases. Once the parcels are identified, how much work is done early on to see whether or not that parcel owner is going to be contentious, or whether or not there's a potential another way to help resolve some of the risks with a particular owner by doing some more upfront due diligence. And really, another enhancement opportunity is some of the county agreements, especially for the signaling agreement, is really to get some of these common agreements, snow agreements, signal agreements that cross counties, have them in place prior to kind of the revenue service date. And as mentioned, the kind of transit-oriented development is critical not only to Met Council, but other agencies across the country. We get involvement. You know, I mean, we did see early involvement from TOD here. And really, early involvement, one, helps identify, you know, not only parcels, but also kind of helps identify potential developers. But more importantly, it helps identify the various constraints that may prevent development and try to address those items early. So just going to a little bit more detail on the insights is really, as I mentioned, strengthening the real estate office. You know, council is really dependent on MDOT to execute right away. You know, real estate offices has some involvement, but really MDOT, I mean, this is their business of right-of-ways and transportation and so forth. So there's a lot, you know, there's a reliance on them. And really, if council wants to increase the responsibility, maybe remove some of that responsibility, its potential of identifying how to increase the personnel within the real estate office to take charge of some of those responsibilities on a consistent basis. Kind of once again, we will say that there was early involvement in MDOT in the real estate office at the initial design, at 10% design, and early, you know, the earlier you get involved, basically the better your right-of-way cost and risk are identified that you can help mitigate. So the consideration is really how much you bring in-house. Bringing in-house people requires full-time people, training and so forth, retention, a lot of considerations, but something to consider. I mean, as Met Council continues to build out new projects, major capital infrastructure, we believe it is something to consider. Next process, we looked at, you know, the easement with the project. You know, you spend a lot of money on right-of-way easements and so forth. Fortunately, I believe you were under budget on that, kind of required for this project. But as you move forward, try to do a better job of aligning some of the easements with the overall project schedule. This was something that was expressed by the project team, is that we probably spent more money on some of the easements than we needed. Some projects, some land maybe earlier than acquired than can actually need it. But I mean, there is opportunity for optimization there. Fortunately, you had no budget issues resulting from that. Just drilling down on parcel ownership. Once parcels are identified, you know, we understand there was one or two parcels that had some complex ownership structures that if early was identified and some due diligence research, it may have saved some dollars. It's something that quite naturally, early involvement, early identification, you know, hopefully this prevent additional costs, kind of reduce the risk. Once again, fortunately, budget was not impacted, schedule was not really impacted, but it did create additional work for attorneys and everyone else involved in the right-of-way process. Signaling agreement, the revenue service date was in March 25. The signaling date, the actual signaling agreement was not in place in September. Quite naturally, there was discussions doing the last year of revenue service and throughout. But if these agreements could be in place prior to revenue service, I think it can eliminate some of the concerns about operations, kind of doing revenue service and continued operations there. And the other thing we want to point out that, you know, the TOD involvement early on, having a point of contact for developers and others in that whole DOT process. The earlier you know your alignment, your parcels, the earlier you can start negotiating with developers and identifying risks with DOT in various areas, and identify opportunities for participation in transit-oriented development. So all that I have on the land acquisition. Once again, we did not identify any control deficiencies. We did have identified areas of process improvements and insights should council take on, mainly with increasing personnel and responsibilities within the real estate office. And I would just say on behalf of Talson, thank you very much for this opportunity to participate in the closeout of Gold Line and Ames construction, as well as this process review. And we look forward to working on other major capital projects going forward.
Thank you. Any questions for Ken and Robert? Go ahead, Chair Barber.
Thank you, Mr. Chair. Just a comment. I think this is great timing, and thank you for doing this. I think it's good to have how the process can be improved. We used to be an organization that was building one big thing at a time. We are not that right now. We are building many things at a time. And so having all the facts kind of laid out before us this way is helpful in making those decisions of, do we build out the real estate office here? Do we continue to work with external partners? But kind of knowing how we could improve the process with that is really going to be helpful as we go forward. So. Thank you.
Thank you.
Any other questions? All right. Thanks again for your work for the council.
Thank you.
We're on to our information items. The first one is that our next scheduled audit committee meeting is in about a month on December 16th, 2025.
Mr. Chair, members of the committee, I'll just, like I've been doing the last couple meetings, preview. So this will be our annual audit plan and risk assessment presentation, as well as annual performance. So we'll talk a lot. It'll be, I don't think we actually have any planned audit report presentations. It's all just about the department. So right before Christmas. So looking forward to that.
Chair Barber.
Are we ready? So, Mr. Chair, I move that this meeting be closed to the public pursuant to Minnesota Statute, Section 13D.05, Subdivision 3D, to receive briefings or reports on security matters.
Thank you. There's a motion for us to move into closed session. Is there a second?
Second.
Thank you. The committee may, by a majority vote in a public meeting, decide to hold a closed meeting to review confidential or non-public information. Discussions at closed session and the closed portion of this committee meeting must be limited to the discussions. No other public business may be discussed or transacted during the closed portion. All in favor, please say aye.
Aye.
Any opposed? All right. We are adjourning the regular meeting of the audit committee, and we will not be coming back after closed session. This is the moment where if you don't know if you're supposed to be in the room, you probably don't want to be in the room.